The sell-off is back. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all sharply lower in today's session as the sell-off resumes on Wall Street. Tech stocks leading that drop after a sales warning from Snap. Snap shares are tanking more than 41% today after the company warned it will miss its own revenue and earnings expectations in the second quarter. The company filed an 8-K with the SEC on Monday, saying the macroeconomic environment has deteriorated further and faster than anticipated since they originally released Q2 guidance on April 21st. That filing said, quote, "We believe it is likely that we will report revenue and adjusted EBITDA below the low end of our Q2 2022 guidance range." Now, in a letter to employees, CEO Evan Spiegel also said Snap will slow hiring as they work to lower cost. Spiegel said the company will still recruit new employees, and he does expect to hire 500 more people before the end of the year. But that's a slowdown from the 2,000 employees that Snap has hired over the past just 12 months. The Snapchat parent company is the latest tech company to slow hiring this year, following the lead of giants like Meta Platforms and Twitter. And the market is also digesting a fresh batch of retail earnings. Best Buy shares are up just slightly today after missing Q1 profit expectations. The retailer did report adjusted earnings of $1.57 per share on $10.65 billion in revenue. That missed analyst earnings expectations, but revenue did come in higher than estimates. Best Buy's same-store sales did fall 8% year over year, which was better than analyst expectations for an 8.6% decline. The CEO said the economic backdrop has worsened since its investor day, and as a result, they are revising sales and profitability expectations for the year. The company now forecasts full-year revenue between $48.3 billion and $49.9 billion. And Best Buy expects same-store sales to drop between 3% and 6% annually. Full-year adjusted earnings are now expected to range between $8.40 and $9 per share. Now, Abercrombie Fitch shares are cratering more than 30% today after reporting an unexpected loss in fiscal Q1. The clothing retailer reported an adjusted loss of 27 cents per share on $813 million in revenue. That sharply missed analyst expectations for the company to turn a profit, but revenue was higher than estimates. Sales rose 4% year over year. Now, the company blamed that profit loss on higher freight and product cost in the quarter. Abercrombie also slashed its full-year sales outlook, now expecting year-over-year growth to be flat to up to 2%. The company did previously forecast sales growth between 2 and 4% this year, and analysts were expecting that to come in at 3.5%. Now, Zoom shares are rising today after beating Q1 earnings expectations and issuing strong Q2 guidance. The video chat company did report adjusted earnings of $1.03 per share on $1.07 billion in revenue. That was better than analyst earnings expectations and in line with revenue estimates. Revenue was up 12% annually last quarter. Zoom forecast Q2 revenue between $1.115 billion and $1.12 billion, which would be up 9.2% year over year. Analysts were estimating just 8.7% growth at $1.1 billion. Company also forecast Q2 earnings between 90 cents and 92 cents per share, better than analyst expectations. And for fiscal 2022, Zoom expects revenue between $4.53 billion and $4.55 billion, which was in line with expectations. The company sees full-year earnings ranging between $3.70 and $3.77 per share, also better than analyst estimates. Now, oil prices are slipping today as the market weighs tight supply concerns with fears of a recession. West Texas Intermediate crude futures dropping below $110 per barrel, while Brent crude futures are just above $113 per barrel. The European Union is said to be moving closer to a final deal on banning Russian oil imports. Germany's economy minister saying that's likely to be agreed on within days. Now, that move would further tighten the global market as the U.S. enters its peak driving season with Memorial Day weekend this week. U.S. fuel demand is expected to be at the highest level in 2 years this summer, even amid record high gas prices. And those prices hit a fresh record today for the 15th day in a row. AAA showing a national average for a gallon of regular just under $4.60. The national average for a gallon of regular has not fallen for nearly a month now. The price has either risen or remained flat every single day since April 24th, and today was the 15th straight record high. Now, in the economic data of the day today, U.S. business activity slowed sharply this month. S&P Global's Purchase Managers Index for both the manufacturing and services sectors dropped to a 3-month low. The services PMI slipped more than 2 points to 53.5, while the manufacturing PMI also dropped more than 2 points to 57.5. Any reading above 50 does still signal expansion, but it's the slowest growth in 3 months. New orders rose at the slowest pace since August of 2020, while the input price index jumped to a new record high. And new home sales plunged last month as rising mortgage rates put more pressure on buyers. The Census Bureau reporting new home sales plummeted 16.6% in April to a seasonally adjusted annual rate of 591,000 units. That was sharply lower than economist expectations for 750,000. New home sales in March were also revised lower. Now, the South saw the largest drop in new home sales last month, plunging 20%. The median price, meantime, jumped to a fresh record high in April at $450,600, while the average price soared to $570,300. Those gains come as the majority of home sales have been concentrated in higher price ranges. And the high prices, coupled with rising mortgage rates, have pushed even more buyers out of the market. But the slowdown in sales did boost supply levels. There were 444,000 new homes on the market at the end of April, which is a 14-year high. And more retail earnings are ahead, which has traders on edge. Nordstrom reports after the close today, followed by Dick's Sporting Goods and Express Wednesday morning. Be sure you're subscribed to my Coffee with Greta newsletter to get those results in your inbox ahead of the open tomorrow morning. And I'll see you all back here at noon for the Wall Report. Give this video a like before you go.